Ira Epstein with your SPDR ETF wrap-up, and this is for Thursday evening, July 23rd, 2020, and we're about 6:30 at night. I got in yesterday all the gear that I needed to begin in high definition and everything that I want, my Zoom meetings for my webinars. So I'm going to be holding these shortly. All my subscribers have been sent a survey by me to tell me the best times to hold this. We're headed to the weekend. I can just see it's overwhelming for the weekend. The question is, and it seems to be settling in on Sundays for the weekend, which works for me just beautifully. So the question is it going to be in the mornings, the evenings? Maybe I'll rotate. One in the morning sometimes, one in the evening, but we seem to be headed that way. How the webinars are going to work down the road is you come into them, you can ask me the questions, bring the quote symbols, and I'll cover stocks, ETFs, SPDRs, and futures all in one. If you're not a paid subscriber to my research, you're going to pay an entry fee to get in, $2.50 to join the meeting. It will be posted on our website. It might be more money there than if you attend live. Become a paid subscriber to what I do. It's included in it. You don't pay the $2.50, and I'm trying to hold a minimum of 2 of these a month. So it should be a lot of fun where you get to answer your questions. And as I said, if you can't meet it and you're a paid subscriber, probably going to see it for free. Not paid, you're going to pay to get it. So we're working all the details out right now, but I think you'll find that there's just so much value in what we're doing. Let's talk about what we've got, though, in the markets right now. Right now, that $600 a week payment ends this week or this month. Nothing has been done yet to extend it. The House Democrats want one thing. The Senate GOP, where it's controlled there, wants something else. The GOP seems to be getting together this coming week, and they'll have their finalized plan. Looks like the payroll tax credit is not going to be part of it. It does look as though they're talking about that $1,200 a month relief, and then something else coming in the way of some number instead of $600, some number each month for those that are underemployed. You got the key word there? Underemployed. It's a very important word. What the criteria are, it's probably along similar lines. We don't know. Convention talk, off the wall. Everything's going virtual. The president has come around to understand that the COVID is just too out of control in many areas to go around the country and hold these convention speeches, then watch people get sick and fall into the Democrats' hands. He's not going to play that game. But it's going to be an interesting election because we've never seen one like this. So get that. All right, so let's go to the marketplace. You're in a correction mode in XLK. Haven't seen that in a while. The market started peaking out against the 110 area and today broke down. Have we changed the trend? No. You still have the higher lows, higher high. Today's low is 106. If you take out 105.49, you break that pattern. You will do what you did back here. That does not mean that the thrust to the upside is over. We could be entering a pause. Where did the market stop? How often do I tell you, and if you've taken my charting course, that when markets are up, the number that they try to fall back to determine what to do next is the 18-day average of closes. And each time this market has done that, that has proven to be an area of very good support. Not one of these times did the market fall all the way down. That does not mean it can't happen. I can only point out on a chart what it's done. I wish my skill level comes in for my paid subscribers as to what I think it's going to do. So it's a two-part event there. So this is going to be very important, what it does right here. Where did the market peak out? Well, let's go back right here. And this was last Tuesday. The high of the day, 110.38. The upper Bollinger Band, 110.31. What do we talk about? The first time you hit a Bollinger Band, wherever it's at, I think pros take money off the table. That does not mean they're not redeploying it on a break. It's not what I'm saying. I think they took money off, and now the question is, what do they do? If they bought it here, where do you think their stop will be? I know where I think it will be. I think, number one, they didn't buy. Why? Why do you buy an overbought condition? You know, it's like on a flight list. Before I would take off from the runway, you have a printed sheet. It's your Bible. You do nothing in the air that you haven't checked on the ground first. By the time you're up, it's too late. You're in trouble. Before you make the trade, where's your checklist? This is overbought. I'm not telling you not to buy. You do what you want. My checklist, no, I don't think you're looking to buy. If you had been long, and I'm not saying you even should have, but had you been long, I still say the upper Bollinger Band was your out. SMH, you did something else here. Let's take this and go back a day or two. All right, both numbers right here are not over 80. They're over 80 here. This is Monday. They're over 80 here Tuesday, and they're over 80 here on Wednesday, which means the market is a buy unless you lose the embedded reading. What did the market do? It lost the embedded reading. If you bought, you're out. You don't play that it's going to magically rescue itself. You know, if you can get out, you get out. What else? For those that are my subscribers, I teach about an outside day. And it's very important if you're going to be a buyer in a market that is in an uptrend, if the market hits the prior day's high or goes through it. I'm not going to tell you the rules. XLI. Why would anybody be buying into a 200-day average in a Bollinger Band is something I don't get. That's where you take money off the table. This is, again, an area that each time we've come there, it has proven to be an important zone. Now, you are over it here, and I'm not going to go further back to show you what it did, but it's an important zone. That does not mean this uptrend and it's got an embedded reading is over. It isn't. Lose the embedded reading, and yes, then you're going probably back to wherever the 18-day average. Don't, and it's just a market that stalled. But this is where I think the smart money took money off the table, and they'll buy on the pullback as long as the embedded reading stays in. Energy sector. All my eye does is go to overbought. But then my bigger eye, because they both work now, is right here. You're in what I call a pipe. In a pipe, you start going sideways and spinning around between the higher and lower bands. Sometimes you stay in a quadrant between the 18 and the upper band or the 18 and the lower band. But you're in a quadrant, and that is dangerous trading. This will ultimately turn into a trade top or a trade bottom. The longer it goes, the bigger the top or the bottom. That's how I look at it. So what do? Both hands go into my pocket, and I walk away from a market like that. QQQ. This market told you back here not to be long anymore. Right here. Here you're with embedded readings. You can see both numbers are over 80. They've been that way. And all of a sudden you lose it. If it stays lost, the next day you cannot be long anymore. It stays lost. I think the pros are going to sell rallies looking for the market to get back to the 18-day average of closes. And the market rallied, and I kept saying, and I did it in these videos, I said, boy, I'm still looking for it. This market owes. I use that word. This market owes the 18-day average. Maybe it's going to be one of those rare circumstances where it doesn't hit it. The word is rare. Most times it hits it, not always. Go do your own homework. I'll lead you a certain way, and I'll reinforce it in my morning subscriber or my Spider afternoon videos, but I will not give you everything here. Well, hold on, let me come back to this. Market rallies. This was Tuesday. Here I'm not here with you. Still, I think it's owed, and boom, right on down to it. Now, for the first time, what am I? Well, I'm pretty neutral on it. The low today was 256.56. This low right here was 255.62. Do you see that? So the question is this market going to take that number out? If it does, so what? Each time you've bid in this area, you've held it. That keeps me away from this market on the short side. And you'll say, okay, but what if it throws out a sell signal? But it hasn't. All it can do is leave the bull side. It hasn't thrown out a sell signal. Let's assume you get through there. You'd have a lower low and a higher high. Whole different ball game. The emerging markets. Well, they got into what we call this pipe, and sometimes instead of a breakout that runs, you try to adjust the pipe. That's the tricky part. This is as much an art as a science. And that's all that it did. Now, when this occurs, I noticed that often the 200-day average acts as the support, the resistance, the upper Bollinger Band. And as you can see, that seems to be pretty much what's going on. If you lose the embedded reading, then I'm going to look for the 18-day average of closes. So we'll see what goes on. But the market does have the embedded reading, so that's favorable. Gold market, you've had your breakout. You never had the pipe per se. You had an uptrend that finally embedded. That tells me on good breaks. Until this red line closes back under 80, the pros are waiting to come in on the breaks. Do I ever say buy over a Bollinger Band? Never. If I do, slap me in the face. Do I ever say sell under a Bollinger Band? Never. Slap me in the other side of the face. I won't do it. GDX. Last time I had you here, I said, no, you never buy the upper Bollinger Bands. I teach that. So that's what I'm going to do. Now you got an outside day down. Okay, but you still have the embedded reading. If you lose this reading, that favors price and the 18-day average coming together, and you take another look at it. It's right now a dangerous market up there. TLT, still bullish. You've got your embedded reading, maybe. Both numbers over 80, I think you'd agree. Let's get here. Let's go to this day. Both over 80, both over 80. You got your embedded reading. So with that, you're not a buyer here. This is where the pros take money off the table. On the pullback, they'll buy until that red line closes under 80, and at that point, I think they come out. Will I be right on that? It doesn't matter. It's what I teach. And as far as I'm concerned, that's what I think can happen. FXE, this is called a gorilla glue trade. Why? When a market hones in and starts latching onto the upper Bollinger Band and doesn't get away from it, watch out. Most brokers will say, oh, it's overbought, it's going to come back. No, 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 no. That's not what it's saying. It's saying something has gotten this market and it's paying attention to not stay excessive over that number, because that's the idea of that algorithm, but it's honed in, and when it gets an embedded reading, it's just a powerful trade. And that's where you're at. And you got the flip-flop of that taking place where? In the dollar. On the bear side, another gorilla trade. So for those of you that trade the spiders and ETFs, you know, I get people and they'll go, Ira, I can watch your afternoon wrap up, and that's good enough for me. That I don't need the spider ETF. Okay, for $8, $9, you want to do that to yourself? That's terrific. It's not how it works. I give you no more than a third of what I give in my spider ETF. Now you start adding the webinars where you can come in and ask questions of me directly that I'll do, and that's going to be included in this price. You're going to pay $250 for a live webinar access if you're not there, if you want to join in and ask those questions. And I will put them out on my website, and I'm going to charge probably $3 there for you to see them. So you figure out what you want to do. Subscription includes this, and I'll keep adding more because there's so much value to what we do. Take a look at what's going on right through here. This is what I'm covering now. There's 5 more that I'm going to add. I already know I'm adding bets. That's the online betting ETF. And now I got to figure the 4 after that. So how do you find out about all this so you can get yourself involved? This is how you do it. You go to our website. These are the prices that we do. Other people that do as much research as I do, you can take this and add $80 a month. The others, they want $100 a month. I think I give you an awful lot for a very low price, because I'm after the mass. I want your friends to come in. That's the business that I'm in. So if you want to find out more, go to the website under the word research. Remember what I said about these webinars. The cameras are all set. I've got my Zoom all set, and we're in the final stages. I'm hoping not this weekend, maybe next weekend to begin them. I'm Ira. You have a good day. Talk to you.